Hi guys, Kayong here, back again with another video on the market analysis. It's been some time since I have the time to actually record any video for you guys, right? But this video itself will be pretty interesting because I'll be mainly talking about the pound, the UK monetary policy statement, right, which will be released tomorrow itself. If you're in Singapore, it'll be on the 4th of August, which is tomorrow, Thursday at 7 p.m. Alright, and if you look at the Forex Factory events calendar itself, you will see that a lot of analysts are pricing in the potential rate cut, alright, by 25 basis point coming from BOE itself. But I would like to make a very bold statement in this video and say that, can the pound dollar rally back up to 1.38? All right, and I do have some, I would say, evidence or even statistics to back me up as to why I made such bold claims that there is still a potential that pound dollar can actually go up to 1.38. All right, but then again, nothing is guaranteed. All right, this is just a potential possibility that might happen if, let's say, tomorrow, all right, BOE decide to not cut rate, alright, or even decide to cut it by just 25 basis point, which is what many analysts has been estimating. Alright, so before we go into the technical chart to look as to why I actually said that there's a opportunity or even potential that pound can reach 1.38. Alright, let me bring you to this report on COT. Alright, the commitments of traders report. Basically, this track the order flow for futures contract. Alright, I would like to bring your attention to pound itself. Let me zoom in a little bit over here. Okay, so for pound, alright, you look at this most recent data that I've compiled, alright, on the most recent data is actually on July, 26th of July, and I would like to bring you to the attention that, look at the long positions being held on the non-commercial positions compared to the short, alright, and the overall net. Alright, for the past 4 weeks, you can see that the short positions overall has been increasing. Alright, and we are now currently with pound futures, alright, is currently net 80.5, alright, 80,500 positions are in net short positions. Alright, but what's more interesting is I want you to look at the COT index. Alright, it's all-time low. Alright, this COT index we track a total of 3 years. Alright, meaning compare this data over here, negative 80.5 thousand. Alright, for the past 3 years is actually the least in terms of that. Alright, the most negative in the past 3 years already. Alright, and I would like to bring you to this Excel chart, which is even clearer. Right, this is in terms of pound. Right, you look at the net positions for non-commercial. Right, it's all the way down over here. Alright, and if you look at for the past four years, right, this is past 4 years data. You can see that it's breaking even the lowest of it in the past. Alright. And we are actually now in uncharted territory in terms of non-commercial short positions, alright? And if I bring you over to the open interest over here, right, you can also see the short position has rallied all the way up, and it's actually about the almost around the same as, let me just quickly check, it's actually almost the same as the previous high in terms of short positions. Alright, and if you look at COT index for the past 3 years, it's actually at 0, alright, meaning it's actually the lowest as compared to the past 3 years. Alright, all this is giving me sign that the market is actually holding on to a lot of short position, and that's why let me go back to the events calendar. Right, that's why I say that there is a potential, right, if BOE decide not to cut rate or even just cut rate for the 25 basis point, traders holding on to bulk of the short positions might decide to just take profit or even close their short positions, and when they unwind their short positions, right, it will cause price to actually rally high up. Alright, so that's why I take a look at the chart itself. This is on pound dollar on the daily time frame. Alright, in the past month itself, since June, right, the whole of July is actually in a consolidation phase. Alright, but this consolidation range is pretty wide. Alright, the high is at 1.35 and the low is 1.28. Okay, that's about 700 points of range. Alright, but on top of 1.35, basically you have nothing until the next level, which is around the 1.39, 1.38, 1.385. Alright, so that's what I'm projecting, is that if BOE do not cut rate, or if they decide to just cut 25 basis point, alright, it might have been priced in for the rate cut. Alright, and traders might unwind their short position, and this will cause price to eventually shoot up. And the next resistance level, alright, a minor one, actually is just at 1.38. Alright, and of course, if this break, there is even a chance that it might reach 1.4 or 1.41. Alright, and these two areas, alright, this level, the lower resistance level, comes in with huge confluence of Fibonacci as well, right, with some minor structure level in the past, but on top it's really a strong level, alright, which I don't expect pound dollar to actually even break this, alright, which is a 1.42 area. Right, we have a lot of Fibonacci confluence as well as previous structure over here. Right, so once again, we never know, alright, but this is a bold statement that I'm projecting. Alright, if BOE do not cut rate, or if they cut only a 25 basis point, which is what many analysts has been expected, there is a potential that pound can rally back up to 1.38. Right, this is what a short squeeze might happen tomorrow. Alright, but other than that, the next major news is of course dollar. Okay, last Friday itself, the advanced GDP in the US has been missing the estimates, alright, and that caused a lot of concern for dollar traders. Alright, quite a bit of them have exited the market, and dollar has weakened quite a bit. But if you look at this Friday, alright, other than NFP, alright, which is the usual important data, we would like to say that average hourly earnings is actually one of the more important data that the Fed and many traders are actually now focusing on, alright, because this track inflation. Alright, estimates are coming in at 0.2, and I would like to say any miss of this, alright, meaning anything below 0.2, you can see another sell-off in the dollar itself. Alright, so let me bring you to the dollar index chart. Alright, this is again on the daily time frame. We are currently in a very nice channel uptrend, alright, but we do still have plenty of room for it to drop towards the lower bound of the channel, as well as a previous support level around the 94. Alright, currently it's trading at 95, so there's about another dollar for it to drop. Alright, so what I'm expecting is that anything below 0.2 in terms of the average hourly earnings, of course, alright, NFP is also important, but I would say that if average hourly earnings comes in anything less than 0.2, we can see another sell-off of the dollar, right? Potentially reaching even 93.5 or even lower. Okay, but of course, a positive one, be it NFP as well as the average hourly earning, alright, coming in at as expected or even any surprise to the upside, we can see dollar quickly rally back up towards the previous resistance around 96.4. Alright, so this is a very quick video analysis to share with you, some of the potential events that might kick off for tomorrow as well as Friday. Right, so if you have any questions, or you like to share any of your ideas, or for us to, bounce some insights off, discussing, the market itself, do feel free to drop your comments below in this video. And other than that, trade according to your plan, manage your risks, and I'll see you in another video.